And for their information, that we have completed 185 webinars till now, and more than 126,000 people registered for our program, and more than 250 panelists like you have joined. So friends, this platform is for sharing knowledge and getting knowledge from you through your questionnaire, through your suggestions. As you are aware, this topic is a most complicated topic of company law, as well as now it's part of the SEBI also. So India's regulatory framework for related party transaction is designed to ensure transparency, fairness, and accountability. Governed mainly by the Companies Act 2013 and SEBI LODR Regulation 2015. This framework mandates strict approval and disclosures. Now, what is the object of this webinar, and what is the object of this particular law that I have just told you? That they want, there should be transparency. The regulator wants fairness should be there, and the accountability, the governed system should be there. So today, through this webinar, we want to understand how the effectively navigating RPT provision, address the real world implication for corporate governance, and provide actionable insight to manage related party transaction in a transparent and compliant manner. You have recently heard that so many cases the regulator has put penalties on related party transaction, and various regulatory bodies, SEBI, SAT, and the court, they have given their judgment on related party. And now this issue is purely matured now. So today in this webinar, we will discuss regulatory aspects of RPT, because without understanding at one place, you will not get the correct idea. Identification of related party, approval mechanism of related party, disclosure requirement for related party, compliance and reporting of the related party. So this, in 5 topics, we have divided the entire thing. And very interestingly, we have invited practitioner, the company secretary from the industry, and they will share their experience that how these people are managing their compliance or related party and what is unique they are doing. So that message should go to others also, and they should get maximum advantage on this. So friends, we have invited a very learned speakers group today. We have Mr. Amit Gupta, PCS and insolvency professional. We have Mr. B. Sanmugam Sundam, Senior Associate Vice President, Company Secretary, Coromandel International Limited, a very big group of South. Multiple companies are there. Then Ms. Geetika Anand, Joint President, Company Secretary and Compliance Officer, Hindalco Industry. She's also worked in so many other group companies, and now she's handling the biggest company of this group, which has multiple subsidiary, multiple associate. So you can understand how these people are managing. We have GP Madan, founder Madan Law Office. He has another program, but he'll join. Then we have Mr. Narayan Shankar, Vice President and Company Secretary, Mahindra Limited. That is also a very big company, multiple companies. And Narayan Shankar has to explain us also today that how these people are doing this complicated work with transparency, with arm's length, and with so many things, because these types of big group, they are making everything. So why they should buy from outside? They will use internal things. Then we have Ankit Singhi, Head Corporate Affairs Compliance, Corporate Profession, and then Nitish Ratwal, Associate Partner, Corporate Affairs and Compliance. So friends, this is a galaxy of speaker today, practitioner as well as a company professional. Now, I just want to announce one very a good news that we have just released our latest edition of our publication, which we are regularly doing, the Handbook of Company Law Procedure. So please open this, Shivam. So this is our new book, new publication, which is 5th edition, Company Law Procedure. And my all learned speaker, you will get this copy. And anybody who wants this copy, they can directly order commercial law. And if they will ask us, Shivam, how much discount you are providing?
Sir, 30%.
Okay, so anybody who wants the copy from us, we can also provide you. So our this handbook or company law procedure, that is a very interesting. Can you explain, Shubham, this? What is contained in this? So we have a USP of this book. Shubham, are you explaining?
Ankit sir is explained.
Okay, Ankit. Ankit, your voice is not. Voice is
now audible.
Yeah.
Okay, so this is the 5th edition as mentioned on this slide, and it's a very important book that we publish every year. It consists, I think, more than 180 procedures.
Little bit louder, Ankit. Little bit louder.
It consists more than 180 procedures, and procedures have been considered determining both.
Ankit, your voice is. Yeah.
Voice is not, am I audible now?
You are audible, but very your voice is very low.
Hello. Yes.
Yeah, again low voice.
Still, it is not working.
Yeah, Ankit, I think you just correct your system. I'm explaining this. Okay. So, friends, this is a USP of book is that you will find in the beginning that the section, how this is, what are the section relating to companies and governance section of SEBI also, rule number, what are the form is connected and what are the approvals required and what are the timeline of this particular thing. So important provision and prerequisites that is for this particular section 63 you will get. Next page. Then you will get a procedure. What procedure, what activity you have to do, which governing provision and what are the steps. And you will find the pictographical things also. So you can see like this certificate from practicing CA. Then you have to hold a board meeting. Shivam, just next. And documents, which document you required for filling board resolution, certified true copy, return of allotment, for reporting a foreign investment, FC, GPR. And then in that, what you require, that is there. And this is a draft resolution of each particular thing, like to consider and approve new name of the company, board meeting, resolution, that all drafts are there. Then timeline for unlisted company. This is the maximum time and this is the minimum time that is there, because maximum time of public limited company, they have to call a meeting where they require 30 days time. So this is the USP of this book. Very interesting book. Anybody is interested who can see this. So friends, I will just tell you the structure of the program. Today, we have a very learned speakers. Ankit will give a presentation on this aspects of RPT. And after each topics, there are some questions. So I will ask from the panelists. And then Ankit will go to the next chapter. And then after that chapter, there are some questions. So we will ask the panelists the answer of this question. And then I will ask the all people, those who are here as a panelist, that how they are managing their company's compliance. And those who are practitioners, we want to ask them how you are managing the multiple companies and what advice you are giving. So this way, the presentation will go. Other people will join in shortly. Over to you, Ankit. Give a brief presentation, and after every presentation, we will do the question answer. Over to you, Ankit.
Thank you, sir. I hope I am now audible.
Now you are audible.
My mic was on the back end. So today's topic, as you mentioned, it's a very comprehensive topic and very difficult to cover in such a short period of time.
So what we have done, we have in the presentation, there are regulatory provisions which we will just touch in terms of, because most of our audience is learned enough to be aware of all those provisions, but it is relevant, it is important to discuss them in the context that we would be putting some questions. So all the issues that we would be, all the key provisions that would be discussed, there would be some topics connected with it, and that we will be putting up with our other panelists to take their views. And then at the end, we will also take the questions that you will put on the chat box. And apart from the other questions that we have received while preparing the presentation, some of the questions which you have sent us has already been considered, so which will be answered during the course of the presentation itself. So without taking much of time, I'll now begin the presentation. I believe my presentation is visible. Put it on. So it's this topic on regulatory framework on related party transaction. So we would be discussing key concepts, where we're discussing key definitions under the regulatory framework, then the approval mechanism of RPTs, disclosure and compliance requirements, and as I mentioned, issues connected with all of them. So there are a host of issues that we have brought here in the presentation at the relevant places. So just to give you an overview of the regulatory framework, so Companies Act, as mentioned by Sir, and SEBI LODR are the two key components which governs the provisions related to related party transactions for any company or any entity which is not a company. In case it is a company, it is governed by both Companies Act and SEBI LODR. If it is not a company, like a bank, it is governed by the provisions of SEBI LODR only and their respective acts. So under the Companies Act, Section 188, 177, 184, 189, these are the key provisions which are considered while you discuss the provisions on related party transactions, and then there are definitions of related party transactions and relatives under the definition clause. Under the rules, all the rules concerning related party transactions are a part of the company's meeting of board and its power rules 2014. Then under LODR, we have the Regulation 23, that is the substantive regulation which covers the related party transactions provisions for a listed entity, and then the definition section which talks about the related party and the related party transactions. So starting with the key concepts, as I just mentioned, we'll discuss definition of related party transactions, and multi-related party transactions. So who all are related parties? So Companies Act, clause 2, subclause 76 outlines a list of related parties that would be considered for any company which is not a listed entity, which is an unlisted company. For them, the related party as outlined under clause 2, subclause 76 will only be the related parties for the purpose of the regulatory framework that we are discussing today, apart from the disclosure requirements under the financial statement. So a director in his relative KMP firm, which director or manager is a relative, or a relative is a partner. A private company in which director, manager is relative is a member or a director. A public company where both the conditions of being a director and some shareholding is required. Then any body corporate whose board of directors, MD, manager is accustomed to act in accordance with the advice. Such provisions also exist under Section 185 and other relevant places. And this is always subject to detailed scrutiny to determine how and when can a board or an MD can be said to be functioning in the on the directions of somebody else. And there are various case laws where it is held that there has to be some document, some series of action, some documentary evidence to establish that a person or a board is accustomed to act on the instructions of somebody. There has to be some express things which can be presented to as an evidence to show that the board of directors, the MD, or the manager is actually acting on the instructions of somebody else, like taking confirmations or email on through any other mode. Is there any agreement through which all your decisions will be subject to some ratification by some other party? All these will be covered under the concept of a person who would be deemed to be accustomed to act in accordance with the advice and instructions of other director and manager. Then any body corporate which is a holding, a subsidiary and associate. Subsidiary of the holding means a fellow subsidiary, and an investing company or venture of the company, like any company. If that company invests in any company and consequent to this investment, the company in which the investment is made will become associate. Then the investing company will also be treated as a related party for the purpose of the company in which the investment is made. Such other persons as prescribed under Rule 3 of Company Specifications of Definition Details Rules 2014, which provides that an holding company, any director or KMP or relative of a holding company will also be deemed to a related party of a subsidiary. And this will not include associate, fellow subsidiary, their directors and their KMPs will not be related party. Only director other than the independent director of the holding company or a KMP and relative of a KMP of the holding company will also be considered as a related party for a subsidiary company. Coming to the related party definition for listed entities, all definition as provided in the Companies Act continues to apply. All related parties covered under those definitions and the concerned definition will be covered. And in addition to the applicable accounting standard, for all, while AS 18 and AS 24 is mentioned, all listed entities, those only Ind AS 24 is applicable. So all Ind AS 24 entities in Ind AS 24 relationships that have been outlined there will be treated as a related party for the purpose of a listed entity. Apart from the Companies Act definition and the accounting standard, there are some other entities, persons that will be covered. So all persons, entity forming part of the promoter group, these all will be treated as a related party, irrespective of their any holding in the company or not. Then any person or entity holding equity shares 10% or more in the listed entity, either directly or as a beneficial interest basis, anytime during a preceding financial year. So if we are looking for any related party in year 24-25, any entity, any person who has held 20% or more at any point of time, irrespective of the fact whether that person is currently a shareholder or not, will be treated as a related party for the purpose of a listed entity. Beneficial interest means any shareholding in respect which is 10% or more, and in respect of which a beneficial owner has declared the beneficial interest under Section 89, then that beneficial owner will be treated as a related party for the purpose of deemed related party under LODR for a listed entity. Then coming to the accounting standard, Ind AS 24, related parties, Ind AS 24 is very comprehensive as opposed to Companies Act. Companies Act related party definition is more and so linked with the KMP's director, manager, has holding company, has very less relevance to the promoters or the shareholders of the company, while the Ind AS 24 is more concerned with respect to promoters, KMP and other entities which are exercising control or significant influence. Other entities which any related party, if there is any other entity which is also controlled and significantly influenced by that related party under some circumstances, that concerned entity will also be treated as a related party of the concerned company. Also important to note that in this Ind AS 24, entity, persons, all are covered. So even trust, in some cases association of persons, all these may be covered under relevant conditions as a related party of a company, which is not the case under the Companies Act. Like trust is per se not specifically covered under any of the clauses outlined in the definition of related party under the Companies Act. Just to give you a reference, an individual be treated as a related party under Ind AS if he or she has control or joint control over the company, he or she has significant influence over the company, he or she is part of key managerial person of the company or of the parent of the company. Any of these persons who exercise these controls significantly, any close member of that individual, close member means a relative, an independent son, daughter of or a domestic spouse, dependents of the domestic spouse, all these will be treated as a related party from an individual perspective is concerned. Similarly, if we consider from a company and entity, any company which is a holding company, subsidiary of the holding, associate entity, joint venture entity, joint venture and associate of the same group. In group means holding parent, there is a relationship of if there is an associate entity of the holding company, then it will be considered as part of the group. Then there are, if these are controlled by persons which are covered under 1, 2, 3 as discussed above, persons who exercise significant influence over it, persons who are identified KMP of that company or its holding company. One important thing needs to be considered that in terms of the definition of KMP control, the definition is slightly different from what is there under the Companies Act. In Companies Act, KMP means MD, CEO, CFO, CS, or such other person as may be categorized as such. In case of a accounting standard perspective, it's a different definition in terms of control over decisions. Then in terms of KMP, KMP means authority and responsibility to take decisions related to operations and activities of the company, which may include director, executive or non-executive. So the definitions are also in slightly contrasting to what is there under the Companies Act. So each case has to be considered differently, and related parties under accounting standards have to be considered from a different aspect as opposed to related party under the Companies Act. Related party transaction, Companies Act doesn't define any definition of a related party transaction. In case of an LODR, related party transactions have been defined. Definition has also been amended in April 22. Some years back, the scope has been expanded. It means transfer of any resource, services or obligations. So there has to be a transfer of any resource, any services, any obligations by a listed entity or any of its subsidiaries on one hand, and a related party of the listed entity or any of the subsidiaries on the other hand. So even if there is a transaction between listed entity and a related party of a subsidiary, still it will be a related party transaction. Similarly, there will be a transaction between a subsidiary and any related party of the listed entity or any other subsidiary, then it will still be treated as a related party transaction under the SEBI LODR. Then if there is a transaction between listed entity or any of the subsidiaries and any other person, the purpose and effect of which is to benefit a related party of the listed entity or subsidiaries with effect from April 2023, will be treated as a related party transaction. So A is very clear. There is a clear transaction between the related parties only. B is very comprehensive, and we'll discuss further that it intends to cover transactions which are in a way designed to directly not fall under the criteria of being a related party transaction, since there will not be a direct related party on as one of the parties to the transaction, but that related party will in some way get benefit out of the entire transaction in a way that transaction has been designed for giving that benefit to the related party, either of the subsidiary or the listed entity. In that case, that transaction will also be considered to be a related party transaction. But another important thing is charging of price is irrelevant. So gift transactions will also be considered. And transaction may include a single transaction or a series of transactions, like in a contract of sales or purchase or any concept, or it may be a single transaction without any contract being supported by it. There are certain lists of transactions that are not considered as related party transactions: a preferential allotment, common corporate actions like dividend, subdivisions, buyback, acceptance of fixed deposits by banks and NBFC. As per the expert committee report that is out in the market, on which consultation is ongoing, certain other transactions are proposed to be excluded from these definitions, like provisions like with respect to opening of a saving or current account with a bank who is a related party, transactions which are entered by directors, employees of the company in normal course, like if you go in any showroom owned by a company and you purchase something, you are a director. So that is a related party transaction currently, but that is proposed to be excluded. Similarly, transactions entered by the subsidiary of the company, since in case of listed entity, subsidiary transactions are also considered. So if it is a transaction entered by subsidiary in uniform basis to all these shareholders, then that transaction is also proposed to be considered as an excluding transaction from the definition of related party transactions. Purpose and effect. So as per the SEBI working group, where basis which this purpose and effect was introduced, is intended to cure the mischief where innovative transactions are used to bypass RPT related disclosures. So where the actual purpose of transaction is to benefit a related party, but it is structured in such a manner that the related party cannot be identified on a prima facie look into the transaction, but the transaction is being executed for the same objective only, then that transaction will be in a way covered under the definition of related party transactions, and it will require compliance in accordance with the regulatory framework. So it is introduced as an anti-abuse provision because companies were trying to abuse using such kind of structure. Important to note that both purpose and effect needs to be fulfilled. If only either of the conditions is fulfilled, then the related party transaction will not be considered as a related party transaction under LODR regulations. So purpose, it has to be designed with that objective, and effect also there has to be a indirect effect of bringing a benefit. Then these transactions are designed with an objective to benefit RPs. Even benefit provided to RPs after multiple layer of unrelated parties will also be considered. It is yet to be looked into how such cases will be unraveled, where there are multiple entities in between, and ultimately the final benefit is being given to the related party. Transactions in normal course, we believe that collective bargaining and other collateral benefits that arise, which is not intended, shall not be treated as forming part of the purpose and effect test. Example, I created some small example. For example, A listed NBFC lends to another NBFC, which in normal course of business lends to a related party of A. So since when A lended to NBFC, it was just a normal lending with no objective, and that NBFC lended to related party of A, there is no purpose and neither to create a benefit for the related party of A Limited. But in case A Limited lends to B Limited with the intention that B Limited will further lend these funds to a related party, here the transaction has been executed with the purpose and objective of ultimately lending these funds to the related party indirectly, then that such transaction will be considered as a meeting the test of both purpose and effect. Some things which can be considered if you need to evaluate whether there is a purpose and effect, generally involve funds, transactions involving loans or other modes of funding. We need to see as to where the ultimate funds will be going, who would be using it. Where there is a transaction with third party which is not commercially sound, there is a question on the competence. Transactions which doesn't appear to be in ordinary course. Some of the ways to avoid such kind of thing, the audit committee can obtain a declaration from the other party as to whether that no benefit will be provided to any related party intentionally. We also need to understand that any transactions where the benefit is being given to a related party indirectly in normal course, without any intended objective of the listed entity, all these transactions will not be considered for the purpose of the purpose and effect test. These will be deemed to be normal transactions and will be outside of the purview of the related party definition and related party transaction definition. So there are some questions on this. Amit, Shyam, if you first of all you would like to add anything on the purpose and effect test.
Ankit, I'm just taking. Okay. So Shan and Amit, whatever first chapter Ankit has discussed, so your quick 2-3 minutes view, and then we'll go to the question answer of this chapter. So your view on this particular chapter which Ankit has given a presentation. Amit, first you, then Shan.
So I think Ankit has set a nice base as far as overview of the provisions is concerned. I think we can come straight to the questions. So we'll have a more time to understand the perspective in which these provisions have to be understood. I think these are the base provisions which have by and large been understood by the industry and the professionals very well. Now, the difficulty arises in the understanding of various intricacies as to whether the transaction would be classified as a related party transaction or not in a particular given situation. If at all, yes, then whether we'll require a audit committee approval, whether board approval or shareholder approval, and whether the approval taken will be for AGM to AGM, and whether the approval can be for multi-year also. I think these are the bigger challenges as and when we come to the questions. I'm sure the questions will be there. We will make deliberations on these aspects, how to decipher between these kind of decision making. I think that's the biggest challenge the industry is facing as of now.
Okay, Amit. Shan, your view on this particular portion.
Spence, and I would echo the points said by Amit. Ankit has sent a good context in terms of the broad contours of these RPT provisions under the LODR and the Companies Act. as Amit was saying, the one point which requires a lot of examination is whether this approval is valid for a particular year or whether you can take it for multiple years. That is one. Similarly, this omnibus approval also, like, this unforeseen transactions that is also is whether it is applicable to only one set of transaction or there can be different category of transaction for which you can apply. So there are certain areas where it could lead to different interpretations. And yeah, we will look at the questions as and when it comes.
Okay. Okay. Thank you, Shan. So now first question is, Amit, I am putting on by you. Considering this an anti-abuse provision, will management be eager to present before the audit committee a camouflage related party transaction where the real purpose is to benefit a related party? How you see this?
Sir, I think Ankit has very rightfully clarified that this is the anti-abuse provision, and regulatory has time and again been introducing these kind of anti-abuse provision wherever they are finding out the gaps to cover their position, be it income tax, be it PMLA, be it Companies Act. You will find out these kind of plug-in at all places. So these kind of provisions in the related party transactions also have been seen. Now, coming with the backdrop that this is the anti-abuse provision, I am sure at the time when the transaction will be placed for consideration, in first place, the transaction, because is not to be considered as a related party transaction, may not come at all before the audit committee or before the board of directors or before the shareholders, because this will never be considered as a related party transaction, because maybe because if it is known that the purpose and effect of this transaction is to benefit to one of the related party, maybe that time this transaction can be before the surface. But in majority of the system, majority of the provisions, because it is a design transaction, the entity A is doing a transaction with B, which is an unrelated party. And now B in turn is doing a related party transaction to benefit C, which is a related party of A. In those situations, the biggest challenge which I understand would be in a first step to have the mechanism in place by which you are able to know. But in majority of the situation, we as a secretarial auditor are also struggling, and I'm sure the compliance team, even the secretarial team of the respective corporate house will also be struggling as to how to foolproof that there is no violation with regard to this anti-abuse provision. But we can create the checks and balances, we can create the regulatory framework, internal arrangement by which the minimization could be done. But if it is known that the purpose and design is to benefit someone, I think then there is no hidden fact. Then the transaction can be evaluated by the audit committee or the board respectively, and they can consider whether it is to be approved or not. That is how I see when it comes to consideration for regulatory framework and its approval mechanism. It is always why Ankit has stated, and I agree to the same, that it is that tomorrow if some transaction is found by regulator that this transaction hits the provision of regulation 23, maybe it was not a related party transaction prima facie, but because the purpose and effect of this transaction is to benefit one of your related party, you are squarely covered in the violation of the provisions, and you will be slapped a penalty or the penal consequences will follow. That is how we understand. But the challenge, I think the debate for the company secretary professionals is all that how to create a framework so that we can foolproof ourselves from the doing of these kind of pitfalls, non-compliances.
Okay.
I think
Okay.
that's the point.
Well, okay. Narayan has also joined. Narayan, you just came. So Ankit has given the framework of related party transaction in Companies Act and as well as LODR. So your quick reaction, and then I'll ask the questions which this is before you.
Minute.
Yeah, Narayan.
So right now, no comments. I just heard, I just entered quite late. So just would love to hear. And of course, it is an evolving thing. Purpose and effect is not something which is tried and tested, and it can go multiple ways. But the key thing, I think probably Ankit and Amit both would have said, both will have to go hand in hand. So that means it has to be purpose and effect. Even if either one of is missing, you will not be able to, neither the regulator nor the company will be able to do compliance, or no compliance would be required if either of this is missing. So both purpose and effect both have to be in a manner to benefit a related party, then only it would probably go. So the classic case with everybody speaks about ICICI giving a bank a loan to say Videocon, correct? And Videocon in turn had given that loan to New Power, where you had a related party sitting over there, correct? Would
Okay.
this come within the mischief of purpose and effect? Apparently, no. If once ICICI has given it for general corporate purpose for Videocon, the intention is not to benefit. So the purpose and effect at that time, the documentation, was it to benefit a related party? If not, I don't think it will.
Okay. Okay. So now, Shan, you have to say anything about this question, or I'll go. Okay, let me just move on. Now, in case of transaction where purpose and effect is a benefit to related party, approval of audit committee shall be taken to the entire transaction benefit that will accrue to the related party. That Narayan has given some idea. Shan, you want to say anything about this question?
Yeah, it is the same point which I would like to reiterate. The purpose and effect test is very important here. That
Okay.
is one of the reasons, the amendments have been introduced in the LODR also, with respect to transaction where,
Sorry, Shan, I am not able to hear it. Ankit, you are able to hear him clearly?
Yes, I can.
The voice is bit low. Shan, if you can put your mic little nearer.
One second. Yeah. As Narayan said, the purpose and effect test is very important in determining, whether the transaction is abusive. That is one of the reasons, that the amendment from April 2023 was also introduced, where the listed entity is not a party, but, if it is with an unrelated party, but if the benefit goes to the related party, that has to be, considered. So that is what I would also echo.
Okay. Ankit, do you want to add in this?
Nothing, sir. I think it's been already discussed with all the panelists.
Okay, next.
So, since we are discussing definition of the SEBI LODR, where it talks about transfer of resources, so there is a recent order of SEBI in case of Linde India Limited, where they have very considered this transfer of resources as in a very different sense, and has considered it as a very wider meaning. I'll take the views of other panelists also. I believe they are aware of the fact of the cases where Linde India and Praxair India, part of the same group, they entered into a JV, and one where the conditions of the JV included allocation of their existing businesses, where some existing areas which were earlier being dealt by LIL will be now transferred to Praxair India Private Limited, where they will do business, and there was some product allocation in terms of the business that the LIL will do, and some products now will be handled by Praxair, that is PIPL. So, basis this transaction, some complaints were received by SEBI regarding the proposed arrangement. The company also tried to obtain a related party transaction approval for some other transaction, but that also didn't went through. But then SEBI inquired into this transaction and found that there was a substantial allocation of businesses from LIPL to PIPL, while there was no actual transfer of resources. But LIPL, which was earlier functioning, for example, in 10 jurisdictions, will now only be functioning in 5 jurisdictions, and 5 will be handled by PIPL. And therefore, there were also allocation in terms of businesses that were doing earlier done by LIL will now also be distributed. Some will be done by LIL and some will be done by PIPL. So SEBI looked into this issue and found that there was a considerable loss that the company may accrue in case the jurisdictional advantages are taken away and the jurisdictions are distributed between this company and the another company. Similarly, there may be loss of business on account of the allocation of the businesses, that some businesses will be done by LIPL, some business will be done by PIPL. While the promoters of the same, both the companies will be same. So ultimately, promoters will benefit out of the entire transaction, but the minority shareholders of LIPL will be at a loss because some business opportunities will be relinquished by LIL to PIPL. And where SEBI has concluded that shared relinquishment or shared allocation of business opportunities to PIPL would in a way tantamount to transfer of resources under the related party definition, and have directed the company to undertake a valuation of the proposed arrangement to determine whether it will be a material related party transaction under the LODR and will require approval of shareholders, because otherwise, as per the contention made by the respondent, that there is no transfer of asset, there is no, this allocation doesn't require any kind of approval from any shareholders, even under the Companies Act, all under LODR. And but SEBI looked at it from a very different perspective and considered it that even loss of opportunity or business revenue, future business revenues can be said to be in a way transferring of that to the other related party, and concluded that as an RPT. So
Okay.
if other panelists, I must, they would have also some views on this. It's a very important judgment, I believe.
So Ankit, this case is very interesting, and the way SEBI and regulatory bodies are now after the RPT transaction, the loss of opportunity is another dimension, and that is a very scary and serious also. So Narayan, I will start with you. Do you think that going too far and thinking of the opportunity loss is also a related party transaction and then penalizing this? What is your view? Then Amit, Shan, all three should tell about this. The way regulatory bodies are imposing penalties on the companies related to related party. Yes, you are right when something is different from arm's length, but saying this, that loss of opportunity, that is also something which is very vague, and it can be anyway. So Narayan, first you, then Shan, and then Amit. Yeah, Narayan. Amit, you can start till Narayan is.
I personally feel that though some people can say this is a innovative way of interpretation by regulatory bodies in respect of this judgment, but I believe as far as the evolution of legislative framework is concerned, this is a rightful judgment in a manner that it gives you a dimension that the transaction, when we are doing or evaluating, it has to be interpreted in this manner also. And technically, what they have concluded to my mind is correct only. And I don't see that there is any gap in interpretation what the regulator has taken in this particular regard. So I am in sync with what regulatory conclusion is, and it will go a long way. And many of the transactions what had been done by the corporates in the past will also be requiring revisiting by virtue of this judgment. It will have a far-reaching implication because a set of professional has been believing that these kind of transactions are out of purview of the transfer of resources, and these will never be considered a part of. But now, because there is a clarity as far as the regulatory position is concerned, so I think we need to revisit the interpretations what corporates have been taking in this regard. So other provisions will also be required to be interpreted in alignment to the thinking what the regulator is doing. I think
Okay.
a very big change.
Shan, your view on this about the judicial. Okay, Narayan, you want? Yeah, Narayan, you can.
Yeah, okay. So Pawan, this is slightly different from what we are probably making out to be. because here actually what had happened, they had gone to the shareholders for approval. They were not able to get the shareholder approval. So they carved out certain products and geographies, as you are aware, as Ankit rightly, to avoid competition, correct? And after shareholders rejected these, they went ahead with only audit committee approval. It is slightly much different transaction than what it appears to be, correct? Because what is the company taking a view? Only transactions in a common contract are to be considered, correct? Because they are saying, I will, the materiality threshold which is required under 23, correct? Which is triggering shareholders approval of 1,000 crore or 10 per person, correct? If there are multiple contracts, then their value will not be clubbed together. So broadly, I think I'm in agreement that if the audit committee will have to go through exclusivity provisions while determining materiality of the transactions. So what is SEBI broadly saying in their order? Club all transactions with a related party to determine the materiality threshold. This we had even discussed when we were coming out with the guidance note on the related party, where there were even differences of opinion in terms of clubbing of transaction with a related party, correct? To determine materiality threshold, correct? And the only tarka over here is if you have exclusivity provisions valued, you will have to include it for materiality threshold, correct?
Okay.
So in a manner, if they are reiterating their previous order, all transactions with one related party must be clubbed. This is exactly what we have also given in the guidance. If you are determining materiality, okay, and exclusivity provisions, which you can have a manner of determining a direct financial impact. They can be valued and they will have to be put. So in fact, there was just a question even in your this one. My chat box, I just said, which talks of dividend. It's a classic case, Pawan, again.
Okay.
While payment of dividend, if the company is paying dividend, it is exempt. But if the same dividend is paid by your related party to you, that is not exempt, although it is uniform to all, because the language is corporate action by the listed entity. Of course, we have taken it up with SEBI, even as an institute, even as an industry, to make changes, because transfer of resources is irrespective of whether you charge it or not, irrespective of value being ascribed to it under Ind AS.
Okay. Okay.
Thank you.
Okay, Narayan. Shan, your point, then I'll request Ankit to follow up. Shan?
Yeah, I'm just coming.
Yeah.
See, one more point we all have to remember is that the audit committee, when it approves the transaction, there are two aspects which it has to be mindful. One is that the need for the transaction per se, and whether it is in the interest of the listed entity. So this is something to be, reiterated, or the audit committee should be mindful of this, So whatever transaction is put up to the audit committee, these two aspects also has to be considered, which is very significant. And as the others were saying, the transfer of resources is something, under the LODR is with or without consideration. There may be a consideration, there may not be a consideration. But if there is going to be a transfer of resources, one has to be mindful of the provisions of Regulation 23. And similarly, any restructuring exercise which the company may undertake to, from the business point of view also, they need to be mindful of the anti-abuse provisions, so that it does not touch the contours of anti-abuse of RPTs.
Okay. Shan, thank you. Ankit, now just to finish, because there are so many questions.
Yes, so I'll rush it up.
So just finish your presentation.
So material related party transaction definition, we all are aware. I was supposed to discuss the Linde order in this respect also, which Shankar sir has already outlined. In Linde order, it has now been very well clarified that all transactions have to be clubbed for the purpose of considering the material related party transaction. Though in terms of the guidance note issued by the Institute of Company Secretaries of India, there is a different view that has been taken, that only a transaction under a particular contract has to be considered. That was also evaluated by this order, and where they've mentioned that they are not bound to consider these guidance notes. And they have given a very elaborate reason in terms of the literal meaning also, that there is no other reading from the literal meaning. Word includes, it says includes doesn't mean, so it is a includes contract, single transaction, or transactions in a contract. So in a sum and substance, there is nothing from the proviso itself which gives you an indication that only a particular set of transactions need to be considered. So therefore, it is very categorically they have stated that all transactions have to be considered for the purpose of determining a material RPT in terms of the limit of 1,000 crores or 10%. Now, audit committee approval, 3 approvals: regular, omnibus, and post facto. Transaction status is already clear in terms of what approval is required for what. There is an omnibus approval requirement also, that the companies can obtain omnibus approval by where audit committee will lay down the criteria, and then also the content of omnibus approval will include parties, duration of the contract, maximum amount of transaction. In case of unforeseen RPTs, up to 1 crore per transaction can be entered only one financial year. As per the policy, you cannot undertake a transaction with respect to disposal of undertaking. Then what transactions can be taken? Omnibus approval, which are repetitive in nature, where quantum of transactions cannot be ascertained. Transactions which can't be ascertained in case of unforeseen approval. Transactions that don't require omnibus approval, one-time transactions, transactions which are backed by a contract on an agreement, transactions which have already been excluded by the audit committee. When to take the omnibus approval, since they are valid for the 1 year, so it has to be ultimately taken at the beginning of the year, even before April, because if you start executing transactions on 1st April without obtaining the approval of audit committee, there will be a default because there is a prior approval. So generally companies tend to obtain the approval in February or March before the beginning of the financial year or before undertaking this transaction. Ratification provisions, transactions involving amount not exceeding 1 crore can be ratified within 3 months. If not ratified, they are voidable. The directors can be asked to indemnify. Information that needs to be placed before audit committee. Unlisted companies, there is no specific requirement of placing any information under the rules. Listed companies, a set of information has been outlined by SEBI by its circular in November 22. Which identifies a detailed list of information that needs to be placed before the audit committee. Some issues, I think, that are important. Sir, you can take these issues now.
Ankit, Amit, only transaction covered in section 188 or all transaction related party needs approval of audit committee in the case of unlisted company. What is your view?
So audit committee approval is required for all the transaction, whether it is TRP or RPT, if we can say so, but there is no exception for the approval of audit committee. If a transaction is with the related party, all transaction except the exceptions which are provided in section 177(4) provisos. There are 4 provisos, out of which 2 provisos provide for the exemptions. Otherwise, in all cases, you will be requiring the approval. There is no exemption.
Amit, I think the reason why we did receive this query is many people believe that since there is no specific definition of a related party transaction under Companies Act as opposed to LODR, and section 188 is titled as related party transaction, so many of the view that only 188 transactions requires approval under 177. But if you read 177, it says any transaction with any related party.
So the construct, I agree, there may be this kind of confusion. So for the purpose of Companies Act, a transaction with related party, and a related party is a defined term in clause 76 of the Companies Act provision. So any transaction with related party will include the related party transactions which are envisaged to be covered under 188(1) also. So obviously it will be a wider coverage in terms of audit committee approval then what is covered under 188. So I agree, board approval or shareholder approval is limited to one of the 7 transactions which are envisaged to be covered under 188. That is sale, purchase, supply of goods or services, leasing of immovable property, sale of immovable property, place of profit. These are all transactions which are falling under 188. If they are not in ordinary course and arm's length basis, then these transactions will trigger the approval of board. And if they cross the materiality threshold, they will also require the shareholder approval. That's how we interpret this provision. But answer for this particular question is certainly that all the transactions which are with related party, including 188(1) transactions, will require the approval of audit committee.
Okay, Narayan, Shan, you have a different view what Amit has said? Or
No, I agree.
Yeah, only one point I would like to say is that under Companies Act, no prior approval is envisaged.
okay, Narayan, you have any point on this as per your experience?
I thought that is this was earlier the case, but after the provision
Modification.
inserted for 177,
Correct.
it has become very clear that it is what they mean is prior. There is no prior to the provision and the rules coming in. We could have earlier taken a call that it is not prior. It could also be post facto. With the provision to 177 being enacted, I think it is clear there's no way you can go for post facto. And
Correct.
like Amit said, very clear, you can't restrict it to only 188. If when you tell all transaction, it is all transaction right with the definition which Amit has very nicely carved out.
Okay. Ankit, next, what is meant for material modification? How the same shall be determined? So, Shan, can you explain this? Or Shan is not able to come on the line. Then Amit, can you explain this?
So material modification means, although it is again very subjective thing, because the law requires the audit committee to frame a policy with regard to the material modification as to what you will consider a modification, which will be considered as material triggering the approval of audit committee.
Okay.
Now, this could lead to a qualitative factor as well as quantitative factor. Qualitative factor could be a little subjective. You can put the quantitative check that if my value of entire transaction increases or decreases by, let's say, 5%, then I'll consider it a material modification. Or the price at which the transaction is envisaged will be varied by a particular percentage, then I'll consider it as a material modification. There could be a mix of qualitative as well as quantitative factor if whatever policy the committee has decided, basis that if there is a trigger of materiality, I think the approval will be required. That's how I look at it. But this is a broad framework in which we have to encapsulate this modification framework.
Okay. So, Narayan, you have any view on this material modification?
Sorry, I was not able to unmute. So same, almost what Amit has made a mention saying how it will mean, and what I'm saying include transactions where you are going to have a particular threshold which you can keep, beyond which you will have to go back to the shareholders. The advantage is if it is within that threshold of say 20% or 25%, it gives you leeway so that you don't have to go to the shareholders once you have said that this is what we are coming to the shareholders for approval. And if you are making it clear in the resolution that it will include any modification to your existing related party transactions, if you have a variance of say whatever you decide in your policy, 20-25% of the existing limit, and what is sanctioned by your audit and board, then you can say that that is within the approval, and only if it breaches that, you will again go back to the shareholders.
Okay.
Just to add, sir, one last line as to it is very important to understand as to why this provision is inserted in the rule book. Is earlier what was happening when the companies were passing a resolution, they were giving a delegation of power saying that the board of director or MD or other person is authorized to make necessary modification in the terms of the contract from time to time. Now, many professionals were interpreting because this delegation has already been approved by the shareholder, irrespective the value and quantity of the variation, they can continue to do the variation without requiring the shareholder approval again. Now, I think this gives a lot of clarity that you need to have that variation or modification within the framework, whatever has been approved. If it is beyond that, you will require the approval again.
Okay, Amit. Okay. So now I welcome Geetika for the webinar. She has she was attending important meeting. She has joined. Geetika, because you have come, so I will ask the next question, and please prepare one very important thing. The questions which are coming, you have to explain that how you are handling. Narayan, that is for you also and Shan also. That these are the questions which are coming. So when I'll come to you or you, and then my main question will be: you people are managing big companies. You have a multiple groups, multiple requirement, and multiple point. So how you are successfully managing this? That is the one message which is required to communicate to all the people, because this related party transaction is always very tough. You, whenever you are saying, Ankit was mentioning initially that if you are buying something from some place, if I'm using a hotel of a company, it is a related party. So various issues are there. So we have to just see the materiality part also. So Geetika, I'll come to you. Next question. Then I'll ask you this particular thing. Ankit, next question.
Sir, this is the next.
Okay. All modification or only material modification shall require approval of the audit committee in case of listed company. Geetika, question over to you. This answer of this question.
The background of this question is because from the user that companies that talks about modification, LODR talks about material modification.
Yeah, thanks, Ankit. Good evening, everyone. Thank you for having me. I think all modifications need to go to audit committee, irrespective. And maybe just point to add, one point to add is that it needs prior approval. While in the expert committee recommendations, you would see that some kind of ratification is being proposed.
Yes.
But as we speak, there is nothing like that. So all modifications need to go to the audit committee with a prior approval.
Okay. Narayan, what is your practice in your company?
Yeah, everything goes to the audit committee.
Okay. And Chan, same view?
Even exempted transactions like holding subsidiary consolidated, where the accounts are consolidated, even that goes to the audit committee.
So all are taking conservative view. The SEBI is talking the material, but the company law is silent. So that's why everybody is following this. Okay. Okay. Next question. Whether transaction involving more than 1 crore can be ratified by audit committee? If no, what will be their fate? So starting Geetika to you.
I'll actually first tell you what the law requires and then tell you what's the practice, because
Okay.
there seems to be multiple, at least two practices which are prevalent. The limit of 1 crore does not come from Companies Act. It is in the listed listing regulations. There also, there is no limit of 1 crore. It does not say that transactions about until 1 crore you can do. What it says is that an audit committee at its own decision can in its policy allow the audit committee to choose that if there are certain parties with whom you're assuming that you may end up having transactions, you give them that designated limit. This nowhere means that in my entire related party, suddenly I do a transaction which is within 1 crore, I can go ahead and ratify. So the practice, the industry practice.
Geetika, just to interrupt, sorry to interrupt. This is there in the proviso to 177.
Correct. But
1 crore is mentioned therein.
But how do you, I think the question was on the industry practice. How do you try and find and balance that industry practice is, especially if you have a lot of related parties, you might as well take up a 1 crore of limit for all of these if you're a listed entity. If you're not a listed entity, you can very well get this ratified in your audit committee.
Okay. Okay.
If I may add one point.
Yeah, Shan.
See, as far as listing regulations is concerned, it always talks about the prior approval of the audit committee. As somebody else said, also the Companies Act also. There is no provision expressly for the ratification of the RPTs actually. However, the annual secretarial compliance audit reports as one of the reporting line items mandates the secretarial auditor to report has there been any ratification to the related party transactions. Has there been any ratification of RPTs actually?
Okay.
So per se, you can say that ratification is not permitted under the law, but however, if the company has either for some reasons, business exigencies have entered into a transaction, which is an RPT, it requires the management to put up the transaction to the audit committee to keep the audit committee informed. So the audit committee, based on the need of the transaction, whether it is in the interest of the listed entity, may ratify the transaction. So this is the limited point I want to make with respect to the ratification per se.
Okay. Narayan, you have any different view in this?
No, nothing. Same. I don't think there is any provision today greatly for ratification. It will. In fact, once you miss it, you have missed it.
Okay. Okay. Ankit, next question. Whether only transactions referred to the section 188 between a holding and its wholly owned subsidiary are exempted from audit committee approval in case of an unlisted company. Amit, your view, then others can tell.
Between holding and its solely owned subsidiary are exempted from audit committee approval in case of unlisted
Company.
transactions referred to in section 188. The transactions which are between the holding company and its wholly owned subsidiary, it's a vice versa. The transactions which are between holding company and its wholly owned subsidiary are exempted under 188. So you don't require the board approval or you don't require the shareholder approval. But by virtue of provisions of section 177(4) proviso, you are required to have the approval of audit committee.
Okay. Okay. Geetika,
Amit, the provision says all transactions other than those referred in section 188 shall require approval if they are executed between holding and subsidiary.
You can continue. Let me just open the provision.
okay.
Yeah.
Geetika, your view?
I just missed hearing what Ankit said. Ankit, can you repeat what?
Yeah, so it says that in case there is a proviso under section 177, which says that all transactions other than those referred in section 188 shall require approval if they are executed between a holding and a wholly owned subsidiary.
Correct. So I just wanted to understand, if the provision is so clear, why do we have this question?
The question is that so it means that only transactions which are covered under 188 will not require approval. For example, there is a loan transaction.
Yeah.
For that, we need to take an approval of the audit committee, even if it is between a holding and a wholly owned subsidiary.
Yeah. I mean, to me, the law is very clear in this aspect. Therefore, I'm sorry, I don't think that.
So therefore, there is some confusion on this proviso. Therefore, we received a query.
Okay.
So therefore, I thought to mention it.
Chan, you have any point on this?
Nothing, Pawan.
Okay. Ankit, next question. Can omnibus approval for repetitive transaction be avoided for entering into a long-term agreement for such transaction? Narayan, what is your practice?
Sorry, let me read it. Can omnibus approval for repetitive transaction be avoided for entering into a long term? So if you have a long-term agreement for transaction, say if you've got a power purchase agreement, say for 5 years, or if it is for more than 5 years also, the contract will definitely override. There is a question of even having omnibus approval. So omnibus approval are those where you do not have a specific contract laid down with a related party. But if you have entered into a long-term agreement, it becomes then a specific contract, correct? So if it is a specific contract, it is no longer restricted to the regime of 1 year. The contract provisions will override. And if you've got, say, a transaction with a subsidiary that I am going to supply, we've got transactions with subsidiaries which will say they will supply engines for our plant for vehicles, correct? If it is a 5-year contract, and if it is breaching the limit, I will go to the shareholders for a 5-year contract. This is something which we've been trying to probably even make out as industry with the regulator to say the circular which they had issued for omnibus put to the shareholders, correct? Where while the listing regulation does not have any provision for per se omnibus approval in the shareholders meeting, but that was more in a manner to facilitate that circular. The whole purpose of that circular was to facilitate to say, if you take approval up to 31st March, what will you do from April to the next AGM? That was the intention, but unfortunately, many people have started in a manner interpreting the provision in such a manner that even if you have a specific contract, you will still have to go year on year. That's not, we don't subscribe to that.
Okay. Okay.
Sir.
Yeah, Amit.
So if we see the construct of transactions, there could be approvals by way of a contract approval, which is for a particular period, which may be 1 year, 2 year, 3 year, 5 year, or it may be a transaction to transaction approval. Omnibus approval is a solution to transaction approval. It is not an alternate to a long-term approval. Transaction to transaction approval means you don't know what the quantity you are going to buy from your related party. You don't know what price you are going to pay to your related party for the procurement of your goods. So every time you are going for a procurement, let us say I am purchasing, I am automobile company and I am purchasing engine every month, maybe 10,000 in quantity. So every month I am putting up an order, I will require the approval of audit committee because it is a related party transaction. To overcome this repetitive requirement of audit committee, omnibus provision comes in a picture that says ki all right, you don't require transaction to transaction approval. You set a limit for a year and up to transactions done within that particular limit, you will not require any approval that will be approved on an omnibus basis. Now, if this limit, whatever we are setting, is crossing the materiality threshold, this will obviously trigger the shareholder approval also. There comes the clarification from the NSE of April 2022, when they says that what could be the period of this omnibus approval. Because omnibus approval is for financial year, because certain difficulties were raised by the industry and the professionals, they said ki all right, because your AGM is scheduled generally in the month of September or August, so you take the approval AGM to AGM and subject to maximum period of this number of months. That's it. Now, question is, can omnibus approval for repetitive transactions be avoided for entering? I will say certainly yes, if you meet all the requisites of a long-term contract. If let's say I have given the example of procurement of engine, you know what quantity you have to purchase and at a price at what you are purchasing. I don't see that entering into a long-term contract of 5 years will be questioned by any of the regulator.
Okay. 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 Ankit, clear?
Yes,
Next.
I was clear. It's just a question, so I thought
Yeah.
we can receive.
Ankit, on the previous question also,
Yes.
I believe the question is arising because there are two negatives in the proviso.
Yes.
The negatives in the proviso says, provided also that the provisions of this clause shall not apply to a transaction other than transactions referred to in section 188. So that means ki the transactions which are covered in 188, the proviso shall not apply. The provision shall not apply. If you read that way, then you will get that, because it is two negatives is giving a confusion in interpreting as to which transactions it is talking about. And I'm giving you a logic also, because 188 transactions will be in any case be exempted between the holding company and its wholly owned subsidiary. So there will be no occasion. That means the transactions will go completely unchecked from the board also and from the shareholder also, and from the audit committee also. So it says that these transactions will require a approval of audit committee. That's how I look.
Yeah.
No, the point is, what do you really mean? This we have addressed it even in the guidance note. What do you really mean by the term other than transaction mentioned in 188? Amit, actually, it boils down only to that particular point. So when
I
you're
will say,
other than, sorry, go ahead, Amit.
yeah, I will say the transactions which are covered in 188, irrespective whether they are in ordinary course of business and at arm's length. The debate is on whether the transactions which are falling in ordinary course and arm's length, whether these will be considered as transactions covered in 188. I will say, yeah, my law book covers these transactions falling under 188(1). So if you fall in these transactions, audit committee approval is required.
Yeah, I think it is fine. It has to be read in terms of the list of the transactions,
Correct.
not whether in arm's length or ordinary course.
No, that's not the point. The key point is, while you say other than transactions in 188, 188 itself gives you nothing in the section 1 will apply to a transaction which is an ordinary course and arm's length, correct? So
That is
if
for
it
board
is
and
in
shareholders.
absolutely, so if it is an OCB and AL, you're completely coming out. So I'm not subscribing to the view of Amit that irrespective of OCB and AL, you will still get, no, it's not. So when you're, how do you interpret the provision other than what is mentioned in 188 is to say what is not mentioned. What is mentioned in 188 transaction in A to G, correct? Purchase of goods, services, immovable property. But the same provision also gives you an exemption. If it is in OCB, nothing of the above will apply. Then one.
Completely get your point.
That's a key point to say. What do you really? How do you interpret the term other than? That's the only point.
I will share my thought. My thought is that if we go with the principles of interpretation, the proviso which is provided in section 188(1) is talking about requirement of approval. But when we are coming to 177(4) proviso, it is talking about listing of a particular transaction in 188. So we have to decipher between the two. If you have to find out whether the transaction is finding place in 188(1) or not, so answer is very simple. Yes, transaction is finding out and covered in 188. Whether approval is required or not, that will be derived from 188(1) proviso. But when we have to check 177(4) proviso, then I'll say whether it is one of the 7 transactions which are covered in 188(1). If yes, then you require the approval under 177.
Okay. Amit, Ankit, next question. Can transactions that exceed the omnibus approval limit approved by the audit committee be covered under the unforeseen transaction limit? Geetika, your turn.
I think Sir Geetika is not there either.
Unmute.
Transactions that exceed the omnibus approval limit.
So Geetika, we received a query where there is a transaction, like for example, a company has taken an approval for an omnibus approval for 100 lakhs. And they've also taken an approval for same related party for unforeseen transaction. But that 100 crore limit, 100 lakhs limit was breached. So the question is whether I can cover the breached amount into the unforeseen transaction limit.
Yeah. Because unforeseen is not just unforeseen transaction. It could be both the amount and the transaction.
Shan, you have any view on this?
It could be an yes and no, actually. Unforeseen transaction could mean that, you may not know whether you will transact with a particular related party. That is also possible. And you end up transacting with that party. And if it is within that 1 crore limit, you can still avail that limit. And in this particular question, whether that can be utilized for the uncovered portion of the approved transaction is something. I think it would be debatable. I would say that there is no right or wrong there.
My view is that unforeseen transaction limit has been provided for a little different purpose. the transactions which you are already aware of, right? Maybe if a limit is crossed, then you require the audit committee approval. This is not something which is unforeseen, something which was not in your
Estimated.
radar. Yeah. Those transactions you have taken approval of audit committee under the unforeseen limit, then you can go ahead. But the transactions where you have just crossed the limit and now because you don't want to go to the audit committee again, I think in spirit of law, this should not be permitted and this should not be considered as covered under the frame of law.
Okay, Ankit, now we have a 30 questions and 15 questions.
Sir,
are-
I'll wrap
So
it up.
just
I'll rush it up
wrap
as
up.
soon as possible.
So I will start my public questions.
I believe this can be, this is about ratification of an omnibus approval. This is similar to the same query. There were two questions. One was the last question and this is the next question. If I cannot use that as part of the unforeseen, then I can get it ratified.
Yes, next.
Board approval. So I'll now come only on the questions. I think okay, yes. So this is a question which we also received, that when we do an arm's length transaction with anybody and there is a pricing, so that exact pricing should be the transaction value, or there can be a plus and minus of some percentage that may be considered by the audit committee as an additional allowance for
Of course it
the
can.
transaction still to be
Can I-
treated as an arm's length.
Can I take this?
Yes,
Yeah.
please, you can.
Yeah, there are, to my experience, there are multiple scenarios. One is where I say exact amount because I may have got into an agreement and I would have already negotiated, done all the parameters, and I would have an exact amount. Sometimes, say, if I speak of the industry that I'm currently working for, the prices are derived from LME index. Then I would say I may not even have a price for that matter. In my pricing, I would say LME index plus or minus 2%, whatever is the range for that metal or whatever is the range for that industry. So you may also at the time of an approval, which is March of a certain year, there is no way you can understand or can predict how the LME or how any index will move, and you can therefore always take that range. Third scenario is where I take an absolute amount and I will still say plus or minus 5% because between getting something approved an entire period of 12 months, there are multiple factors that may play a role, which is timing, party, negotiations. So you can always build in scenario basis that, and therefore you can have multiple of them. It doesn't mean doing it at one price.
And we can then also avoid both board and shareholders approval, considering it
What
is
you
an arm's
need
length.
to get
agreement.
approved is how have you justified arriving at that price?
Agree. Agree, Deepika.
Okay. Okay. Ankit, next. Whether arm's length pricing has to be backed by CA certificate or this is
Or the audit committee or the management can provide some documents on which audit committee can rely.
It all depends on the comfort of the audit committee. Many of the transactions which you do, you can even have internal valuations. It's as good. You don't have to spend money for a CA certificate only for the purpose of just having some document on record. But at the same time, if it is a material transaction, many a times you have one valuation, you get two valuations, and if it is quite a big transaction and where it variance, or I'm saying the range is too wide, we even have a fair value between the two valuations.
Sir, the issue that we have faced in this case, that at many times the auditor is not in sync, where even audit committees relied on the documents produced by the management to justify that it's an arm's length transaction. The auditor is not comfortable with those documentation, and they force the companies to obtain some kind of certification from either them or from some other chartered accountant or other firm to be sure that it's an arm's length. So therefore, many companies are facing this challenge.
Unfortunately, many of the professionals have taken a view that this is the arm length pricing, whereas it is not the case. It is the arm length basis, and basis is including pricing. Also, pricing is just one of the component. You have to see rest other parameters also when you are deriving whether it is an arm length basis or not. I agree. The challenge, what you are saying, is an everyday challenge whenever we are entering into the audit and other things. These kind of questions everybody is posed on, and we have to deal with this situation. But I think over a period of time, education and discussion only can help us out in overcoming this kind of situation.
Can I just quickly add one point? I know we have paucity of time, but just one more point of view in addition to what NS and Amit said, is that it's not black and white and straight jacket in all cases. How much confidence your audit committee has on your management? That's number one. What kind of transaction it is? That's number two. If you're doing routine coal purchasing, there's no way a CA can do. Another point of view, our beloved J.N. Gupta ji keeps on saying that these days valuation is not no more maths. It's become an art. You are able to
Yes.
get what you want. And therefore, why are you asking for this valuation certificate, and in what kind of a transaction is important to know? All transactions, you cannot get a CA certificate, and even it's not logical. For, say, a company of a certain size, if I speak for ourselves,
Yes.
about 5,000 plus transactions. Are we saying that the entire round the year will keep on getting certificate? The answer is no. If it's non-routine, if it is a specific nature, which in the ordinary course of the audit committee, it may be difficult to ascertain if the management is saying this was done on arm's length, they may request for a CA certificate. However, if the audit committee does not have confidence on its internal management, it may ask them to get certificates for major cases. So there are multiple cases, it depends.
Okay.
Completely.
Ankit, now you have to quickly tell.
I'll only take the questions if there are any.
Ankit,
Yes.
because 5:30 I have to leave, that's why.
Yes, sir. I'll only take the questions that we have received.
How to determine limit in case of newly incorporated companies?
It in reference to section 188. Because it talks about audited balance sheet, audited financial
Okay, now
statement.
I will ask, because now 30 minutes are left, I will ask only question from one person. If his question is no, you are not in agreement, then you can come in between, otherwise we will go ahead. So Amit, how to determine?
So you have no option, but you have to wait for one complete financial year. Then only
But I have to do transaction now, what do I do?
You do it without approval then, because there is no audited balance sheet that is available.
essentially.
Yes.
Okay, next. In
So
case,
basically, we did have this point discussed, Ankit, and very clearly.
Yes, I know that. Sir, it was a question by one of the user. So I thought it to put it in the presentation itself.
Correct, we had discussed this
Yeah.
thread, even when we were going even to JN. So we had very clearly made this point very clearly to say in case of a newly established company. And the point which was raised is if you have
Subsidiary.
taken advantage of that and thereafter at the end of the year you conveniently hive it off, is it okay? You have to ensure that at least at the end of the year you keep it as a wholly owned subsidiary, wherever whatever exemption you are taking. But it doesn't mean that just because the audited balance sheet is not there as of now, I'm going to say that that's not available. It is still available with me.
okay. In case of listed entity, whether shareholder can't vote on any transaction in which they are interested.
All
If-
related parties are restricted to vote in favor, vote to approve the transaction.
Okay.
Only on material related party transactions.
Yeah.
The question came because one of the in one of the very recent case, which was also running on the LinkedIn, where scrutinizer has rejected the voting of promoters on a director retiring by rotation, who is a promoter, as an invalid vote.
So this
I
is
believe this was
correct,
so yes. Therefore, there was a lot of confusion surrounding that all transactions they cannot vote. So
I'll say,
I
Ankit,
believe this was the
just
background
one
on
line
which
of
we received this.
clarification. There is a difference between the shareholder approval and the approval of shareholder under regulation 23(4).
Yes, there
Unless
is,
and
there
until
is.
your resolution is proposed under regulation 23(4), you don't have to check whether the related party is voting or not. There is
Okay.
no other provision. Even if a managing director's spouse is getting appointed, the managing director holding 75% of equity may be interested, but he can vote.
Okay,
As long
Narayan.
as it is not material.
Okay, Narayan, whether is transaction related to purchase and sale need of squared off for calculating the limit?
For unlisted company.
Squared off means I didn't get this.
Sir,
So
the
what-
question we
Gross
received
net.
that gross net.
You will have to add both. You can't square it off.
Yes.
Okay. Next. In case of negative net worth, whether all transactions related to buy or sell property will need approval.
Yes.
Okay. Next. Whether exemption related to holding subsidiary transaction will not be applicable to newly incorporated subsidiary until the accounts are consolidated.
No, nothing
It
like that.
will be available. We just said it is going to be available, but please ensure that you don't take advantage of the benefit. And at the year end, we find that that company is no longer a subsidiary.
Okay. Whether approval of shareholder is required before executing any material related party transaction or before related party transaction exceed the limit of 10% or rupees 1,000.
Or INR 1,000.
Okay.
Go ahead, please. Next.
So this is the question.
Like, so what is the answer of whichever is lower?
So, sir, this question is received because a lot of companies face challenge that is this, since material transaction is the entire transactions become material once we aggregate all of them.
I'll give you an example.
Yeah,
what
Gitika.
I'm trying to say is, assume if if I know in my month of March that during the year my transaction with this person may cross 1,000.
Yes.
Do I need to take it upfront, or
Yes.
I can continue, and when I'm around 800, I take
Yes,
it?
yes. This was the question.
Okay, you can take it when you are at 800.
Whenever you're crossing, absolutely. Only thing is, don't breach it. If you're breaching, there's no way of ratification, correct? So, but suppose if I'm doing a transaction with a subsidiary, like Gitika was saying, suppose it is still 900. Forget of 990, correct? I will not cross 1,000 without ensuring shareholder approval.
Sir, the only question is that if I am aware on a historical basis that every year it is breaching the limits, and all entire set of transactions from rupee 1 to rupee 1,000 will be a material related party transaction, can, in terms of spirit, can I execute them without prior obtaining the approval of the shareholder? Is the approval only for 999 crores plus 1 crore?
No, I didn't get it.
Yeah. Yeah.
If
The answer is yes.
If it is like Gitika was saying, if it is a normal, if you have a specified contract with a subsidiary or a related party, you will go under that. There again it comes back. You will never go for year to year if you have a specific contract, correct? Because you don't have a specific contract, because you have an omnibus, and if you are breaching, let's take your example. Last 3 years you have been breaching 1,000 crores.
Yes.
This year, if you feel that you are not breaching, you've not gone. And many a times you will find people coming at the dead end with a postal ballot.
But if I know I will breach?
So if your budgeted is more than 1,000 crores, by all means you should. Why will you go separately by way of postal ballot and spend money? No one will do.
In fact, Ankit, I like
Yeah.
the way you're asking this because I have my answer. I'll flip it for you. Tell me one thing. Assume if I take it in February, like you are saying, कि
Yeah.
1,000 से होने वाला है, and if they reject it, what are they rejecting? Are they
The entire transaction.
99 or are they
All of them.
That's the answer you need.
Yes. I know.
Yeah.
Okay.
It is also important that if my entire transaction, if my contract for 1,000 crore is approved, I cannot approve the transaction of 1,000 crore without having approval in place. If I am doing 900 crore transaction contract, then all right, no problem. 100 crore, whenever you are crossing, you take the approval of shareholder and go ahead. I think that's the point that we have to take care when we are doing such kind of transaction, or you have to word appropriately in your transaction document that beyond a threshold of so-and-so, the contract will be valid only after the necessary approval is in place.
Okay.
So now we can take the questions.
Okay, now I'm taking public questions. So because questions are more, so I have to start a rapid round. So rapid round means I will ask questions.
Are we getting something?
No, I'm just reading out because, or you can read in the chat box. Okay, can you please quote the example of transfer of resource, service and obligation as per the definition of related party transaction as per SEBI LODR?
Any contract for any services, purchase of goods.
Yeah.
We can discuss. There is a lot of dilemma in terms of guarantee related contracts, where you enter into a guarantee and where the actual obligation will transfer once the guarantee is invoked. So do I need to take an approval now, or do I need to take the approval when the guarantee is invoked? The obligation stands transferred at that point of time.
Ankit, Institute
Yeah.
Guidance Note has taken a view. I think Shankar sir is there. He can give a better clarity. To best of my recall, they have considered that will be considered as transfer of resource.
Day one.
And can you just tell?
Agreed. So Ankit, it is never a question when you are giving a guarantee, you never know which of this will be invoked or revoked,
Yes.
correct? So the question can never be on invocation is never a great idea. The question, you are taking on a liability on your head of a guarantee on behalf of a related party. If that guarantee is breaching 1,000 crores, you have to go to the shareholders prior to giving it. And you can't be giving, because at the end of the day, once you have given a guarantee, you have to stand by it.
Obligation you've taken.
So when at the moment you take the obligation, entire definition of transfer of resources or obligation, correct? The moment you take an obligation, you will have to take it.
Okay.
Sir,
Is
will
the-
the same analogy apply for a personal guarantee taken by the corporate?
How can corporate take a personal guarantee? Sorry.
Promoters guaranteeing.
Corporate has requested to give a personal guarantee for securing the loan to a corporate. Like
what
I am a
is law-
director, I
I'm
have
saying, is the company giving a guarantee or company is taking a guarantee? Sorry.
company is taking a guarantee from a director.
So what is the loss
Of
to the
securing
company?
to the bank. It's
So
a
what-
related party.
So what? But there's no loss to the company, na?
No,
If-
but similarly, obligation.
Question is not of a loss.
Huh.
Question is whether it is a transaction which is considered as a RPT or not.
No, the transaction will be RPT, no doubt, but whether it's a RPT transaction has not
Why
been
I am
valid.
highlighting to Shankar sir, because on one hand, when we are saying that guarantee transactions are covered, right? They will be considered as transfer of resource. So when I am taking a guarantee from a related party, unfortunately, I have not seen any of the big corporates coming out with taking approval. And I'm sure the guarantees are more than 1,000 crore invariably in most of the cases.
In most of the cases, promoters are guaranteeing the loans.
Okay. Is Ankit, the question which are normal and somebody is asking, just you give answer yes and no. So I'll move the tough question to all the panelists. Okay. It has been mentioned that payment of dividend is not considered a RPT, but the information of RPT that is required to be filed with the stock exchange SBRL format, required to provide information on payment of dividend in it, treated as an RPT. Narayan, you have given answers. What you want
Sir,
to add?
It's all
Sir, I think the reason is it is because of the
an
accounting
answer
standard.
to Pawan in the
Okay.
absolutely.
It is because of the accounting standard.
Again, transfer of resources. Yeah.
Madan sir, welcome. Whenever some questions are there, which you want to come in between, please tell us. Whether RPT can be approved through circular resolution, Ankit?
RPT from a board or audit, generally board doesn't approve RPT through circular resolution, so we don't recommend approval from audit committee too, since it follows the same set, but companies follow different practices.
Legally, you can.
Yes.
From
Yeah.
a governance point of view, if it needs a discussion, you may not.
Okay. Section 8 companies not having share capital, do the transaction with member will be treated as related party transaction?
Section 8.
Companies not having share capital, do you think transaction with member will be treated as related party transaction?
If they are covered in related party definition 2 clause 76.
A member will not be covered there.
Yeah, no, it won't be.
So what they will do if suppose I'm a member of some Section 8 company and I want to use my company's services, will not be a trade
Sir,
related.
even shareholder in a company is not considered as a related party under the Companies Act in terms of the pure definition.
Only listed entity
Yes.
promoters are considered.
Okay. Whether a party who was shareholder holding more than 20% share in preceding year will be considered a related party in current year, even if it is not holding any share in the current year.
Yes, it is.
Yes.
Yes. Dividend declared by listed company is explicitly exempted. However, dividend declared by subsidiary to be listed company is not exempted. What is your viewpoint whether prior approval RPT is required?
I think this is the point Shankar sir has highlighted in the beginning itself.
Okay.
Sorry, I missed that, but just to add that SEBI in its expert committee consultation paper has tried to get an exemption for this.
Yes, for
Yes.
all
Should
common
be exempted
shareholders.
because one side you are exempting, other side maybe
Yeah.
the interpretation.
Yeah.
One public limited company is making more than 30% transaction from related party, which are about 15 to 17 units such as proprietary firm, partnership firm, private limited firm.
So it's an incomplete question.
My question is how independent director will monitor these transactions, whether these are genuine or not, since company may purchase at a higher rate, lower quality from these related party, how it can be controlled by the independent director. His question is that how independent director they can control. So Geetika, Naran and Shan, how you people are managing this type of things, because independent directors may ask you various questions. So without, all the big good corporates, they create documents in such a manner that they should not ask any question because all answers are you are prepared in advance. So what practice you people are doing?
Shan, you want to?
Shan,
In terms of putting up the transaction to the audit committee, we give the complete details in terms of the nature of the transactions. Anyway, SEBI has got a very detailed, issued a very detailed format in terms of the transaction. And also the rationale for the transaction, what is the business case for the transaction and how it could, impact or how it is, why it is necessary for the company to enter into such transactions. So I think all these factors are considered by the independent directors and then only approved. And we, as I said, we always ensure that there is a submission of all relevant information to the independent directors to give them the necessary comfort in terms of the overall details of the transaction per se.
Okay. Madan sir, this question is to the on the basis of that how the independent director manage all these things. Can you highlight some?
Throughout, I'm sorry, I'm in a car. Today, throughout,
Yeah.
I was addressing the budding independent directors from the top positions in the armed forces. This was one of the major that why this amendment has been brought in, that why this related party transaction should be approved by the independent directors only AC. When minimum of the information is coming to them and they are supposed to give their approval to these transactions, why should they put in their neck in all these things? And I tell you, because of this, they were really scared that why should it take amendments of independent directors when we are supposed to approve this related party transaction? I tell you, this is becoming a big dampener for the independent director, all good independent director to become part of the independent director team.
Okay, GP. Oh, in case of renunciation of right entitlement from one entity to promoter group to another entity in the promoter group, and the renunciation is a material transaction for the listed entity. Considering that it is with the promoter group entity, it will be a related party and will need shareholders' approval. However, the SEBI entity is yet to receive the communication of the however, the listed entity is yet to receive the communication of the entitlement and hence will not be able to provide the consideration which will be involved in the transaction, since right renunciation are treated on the market. In this case, what should be the consideration to be provided in the exemplary statement? Can it simply be said that it will be a prevailing price or the date of the transaction?
Yeah.
I think this transaction, when you are giving equally to everybody and the right transaction, then what is the special thing in this?
Sir, it is a private transaction. Renunciation is from the listed entity who is the shareholder, I believe, to
No, that's
the
okay.
another
But
promoter entity.
I'm doing legally and I can sell it to anybody. So I can do it. So what is how the related party will come into this picture? Any view on this? Geetika, Amit,
The per se capital market transactions
are exempted.
Yeah. Now, in this case, because it is not specifically mentioned, you can always take an opinion and take it. But coming to the specific point as to what will you take in your explanatory note, just in case you're also going, it has to be as per prevalent market price. There is no way you can know. The only one thing is that if you want to limit, put a limit, if in case you want to, you can always say prevalent market price, however, not more than this or not lower than this. But that's more like what you need to.
But Geetika, if I'm a promoter or anybody, I am following various limit also. That if I'm exceeding this, then this law will applicable, and this is applicable to all. So I'm doing on arm's length because you are not crossing the limit. If right renunciation I'm selling to somebody, that is the same rate I'm selling. So what is the problem? Even if I'm selling is a lesser rate. So lesser rate you can't do.
That I agree with you, and largely I agree with you. But whenever things like these come to question, someone might still say that rights issue renunciation period, the trading window is for a certain number of days. What was your reason for not doing it on first day and doing it on the sixth day when the price was 10 versus the price was 20? So just to keep your liability check in range, you can have a not higher than, not lower than, and then operate within
Okay,
that.
you go cautiously. That's all.
Yeah.
Okay.
Yeah.
Our company has entered into RPT transaction, which is between a holding company and its wholly owned subsidiary. Hence, shareholders' approval was not required. Please guide me pertaining to disclosure to be made in upcoming quarter corporate governance report and attachment to be filled with NSE portal pertaining to material RPT.
All disclosures are required, irrespective whether they are requiring any approval or not.
Okay. Any different view? Go ahead. So let's, if it's okay.
No different view.
Okay. Sir, a
Agreed.
listed entity entering into transaction with the related party, which is in the ordinary course of business and arm's length, requires approval from shareholders. Question.
If it is a material related party,
so
arm's length ordinary course
Yeah.
is no role to play for a listed entity.
Okay. And if it is a material, then you have to go to shareholder.
Yes.
Simple point. What action did LIL and PIPL take on the suggestion of SEBI? Please throw some light on SEBI's judgment. Ankit, you have studied
There is no further update. I think after the interim order, the final order where SEBI has directed them to obtain a valuation report to determine the need of materiality. There is no further update. I have not also seen that whether they have gone to SAT or not.
So if I can, suppose I am doing some transaction and I have a doubt that somebody may question, I can put the certificate of valuation and then I can go ahead.
That is what SEBI has directed them to do.
Okay. What documents independent director may call for from company to go through these transactions? How independent director will ensure it is a genuine only? So, Shan and Narayan, please tell how your independent directors are asking and how you are fulfilling this.
Certification by a big firm or accountancy firm, which will give comfort to the independent directors in terms of the arm's length or the ordinary course, that part. And they can also evaluate the various aspects of the transaction in terms of how comparable it is to the market prices and how it is in compliance with the transfer pricing regulations under the income tax and all that. That is one part of it. Apart from that, depending upon the nature of the transaction, you will have to give the appropriate documentation to the independent directors or information to the independent directors, so that it satisfies their, review and, so that they can comfortably approve it.
Okay. Okay. So, Geetika, you have any different view in this?
I think that she is on a call.
Okay. Sir, one more question. A listed entity entering a transaction with related party in ordinary course in arm's length, taking audit committee's approval is sufficient, or there are any other compliances required?
Sir, if it is a material, as I mentioned, if it is a material RPT, shareholders' approval will be required. Otherwise, nothing is required.
Okay. While preparing AOC2, does loan invest in shares to be taken? Amit?
Invest in
Not at all.
shares needs to be considered, sir, and loan may not be. Acquisition of property, if you are acquiring some shares,
Okay.
then it might require disclosure. Loan is not required.
Okay. Amit, any different view?
No, not at all.
Okay.
What I'm saying is
Above
that
transaction are with
it is
R.
188 transaction, which is required to be covered in
Yes.
OC.
Okay. And this transaction is section 276.
ठीक है sir. That is why it needs to be covered.
Can we directly go to question 7A and learn the practical aspects for speakers as the theory is known to all? Okay, yes.
Question 7A, which is 7A?
No, he's saying directly to question answer from learner speaker. ठीक है, okay. From material RPT financial transaction like loan are covered. If yes, whether repayment of loan or earlier financial year should also be included.
For material financial loan, repayment is an end result of a loan, sir. I don't think it will be covered.
Geetika?
I'm
Oh,
sorry, I just had
Okay,
stepped.
Amit, you?
Not required, sir. Not required.
Yeah, Geetika.
I'm sorry, I stepped away for a minute. I could not follow the question.
Okay, no problem. Madan and Narayan, whenever the question is there, you just raise your hand or you can speak. Open your
On
window.
the last question, sir, answer is very simple. If you purchase the good, on one hand, goods are supplied, on the other hand, payment is made. So the
Okay.
same way, the loan transaction also has to be understood.
Okay. If we have RPT only under Companies Act and not as per the Ind AS 24, are we required to disclose the same in the financial statement?
Yes.
Okay. The related party transaction which was approved by the audit committee should again get approval by board of directors.
If it is not in arm's length and ordinary course and falling under 188,
Then,
it will require approval of board.
okay. Whether this shall be applicable for unlisted company as well as?
Yes.
Okay. Related party transaction which was approved by the audit committee should again get same question. In case of contract to be entered is for a period of 10 years and the contract does not breach limit of 1000 crore during the financial year. However, the total contract value for 10 years exceed rupees 1000 crore. In this scenario, does a company is required to seek shareholders approval?
No.
Ankit saying no. Geetika, you?
No.
Okay. Any other person who will say yes? So,
That's the question, sir.
so no has more votes than this. Okay. How we read last provision of section 177(4), subsection 4 as reproduced below. Provided also that
I think Ankit has asked this question and I had replied that also.
Where, sir, Shankar sir has a different view.
Narayan, you have a different view of this?
Not exactly different view. He is only on the point how you will read the other than transaction referred to in 188. Only on that particular point.
Okay. Question is with regard to unlisted company. What is provision? I think between a listed company and its 100% subsidy for loan, does it need shareholders approval?
No.
Okay, sir, whether remuneration to director will cover under section 188?
We don't cover it.
Okay. In my view, unforeseen transaction is something different from omnibus approval. Hence, it can be permitted.
Cannot be.
Amit?
Sir, can you just repeat?
He's reversing. He's saying, in my view, unforeseen transaction is something different from omnibus approval. Hence, it cannot be permitted.
No, it is covered under the omnibus approval only, but there is a clear-cut demarcation as to what will be considered as unforeseen. So that's why when we were discussing with Ankit, then we have said that if a transaction is already defined and we have taken a particular approval, then that particular transaction cannot be extended in the garb of unforeseen transaction.
Okay. Can you please provide the presentation? Yes, we will send it to you. We'll send it to all the participants. Can a private company pay only consultancy fee to its director at 5 lakh rupees per month and treat it as an ordinary remuneration? Will officer of place of profit under section 188 be applicable? Because as per 197(6), a director can be paid remuneration by way of monthly payments, whether the payment can be through consulting fees. Anyone?
It can be paid through consultancy fees only if this fees is linked to a certain profit number or certain revenue that the person is supposed to derive, it becomes an office or a place of profit.
Okay, okay. Do we need to take a certificate for arm's length also?
We discussed this, sir. Not necessary.
Okay. One independent director is two different unrelated listed company. It is cause any material purchase or service between such companies as related party transaction.
No.
No.
Don't note. You have to speak because so many people are.
No,
No,
so they will not be considered related parties, both
Okay.
the listed entities.
Okay. Then in section 188, the word special resolution is substituted through resolution. What does it mean? Does it mean the only ordinary
Sir,
resolution?
ordinary resolution, we can move.
Okay. Private company entered into RPT having value more than its paid up capital and passed ordinary resolution. Does it require to be disclosed as MGT 14?
No.
Whether remuneration to director cover under section 188 to Companies Act 2002, Companies Act, if yes, then under which set transaction?
We don't cover it.
If a RPT is about occur related to office or place of profit in the company by relative to of directors and the same needs shareholders approval, as it will exceed 0.255 lakh remuneration per month, it is possible to take shareholders approval and give remuneration retrospectively within a financial year, and whether single approval is sufficient for multiple years. Anyone?
Not for listed entity, definitely. And I'm thinking.
So any resolution you pass to anything, it gets approved on the date of approval actually.
Yeah.
And what about the unlisted company?
Especially for office or place of profit, it's a prior approval.
Yeah.
Even
Okay.
if it is ratified, it can be ratified only within 3 months. So even this is beyond the ratification period.
Okay. Whether the 5% limit on royalty payment under regulation 23(1)(a) of LODR included in the overall limit of materiality, or it is a separately available?
Separate limit.
Do we still require follow the LODR approval of related party transaction? Whether the listed entity is exempted from applicability of corporate governance as per regulation 15(2) of SEBI LODR?
No, I don't think so. There is an exemption for certain class of entities.
Pure exemption.
Okay. My question was to material RPT for calculation limit of material RPT, all transactions to be sum up like loan, interest, etc. Also, I have taken loan in current financial year and I have repaid loan of previous financial year. Then repayment will be calculated in limit. NS and Geetika Anand, please inform your practice.
It has already answered this. It's like a
No, they are
payment
asking,
for goods.
she's asking that lady is asking question from NS and Geetika. What is your practice?
What's
So,
With they are also, the question is whether you will also consider interest component on loan for the purpose of the
Yes.
materiality, and in case in previous years we have repaid the loan, I think that it will, whether it will be considered or not.
okay. Appointment of MD will not require approval of audit committee. However, remuneration will require the approval of audit committee and NRC, etc. Is it okay? Somebody is giving comments, so you have to just.
No.
Okay. Can you please take up the above mentioned two questions, and also if relevant provision is confirming regarding question MGT 14?
If it's not a special resolution, it will need to be filed in MGT 14.
Okay.
It's an ordinary resolution.
Okay. Relative of whole-time director appointed up to the office of the profit, monthly remuneration 3 lakh, whether it is a related party transaction, even if shareholder permission is taken.
The permission would only be taken in considering it's an office or place of profit. Otherwise, why it would take approval?
Okay. Okay. So now I have covered all the questions which we have received, around 45. So because time has already, we are crossing the time. So I will, the very important question which I want to take it from the three industry people. Now, Shan, I will start. How you are managing all these arm's length, related party, the shareholders approval, the board meeting, board approval, audit committee questions, agenda of the audit committee, the multiple things which you are doing. So this question is common to all three. So how you are managing this is very important. So this message go to the all people, those who are in the corporate world. You have to unmute.
RPT,
Yeah.
yeah, in terms of agenda to the audit committee and the RPT, we comply with all the regulatory requirements in terms of whatever information needs to be given. And in terms of, what is the nature of transaction, the business aspect of it, everything we give. In terms of arm's length and ordinary course we can determine based on the nature of the transaction. Arm's length, again, having regard to the type of transaction, if we will be able to establish the market, it is comparable to the market rates. For instance, if it's a commodity, we can know the commodity price, which is quoted in the market, that can be provided as a justification. Wherever this pricing is something which is not available in the market, or it's very unique to the industry or unique to the company, then we may even go for a certification on the arm's length.
Okay.
Yeah,
Okay.
that's it.
Okay, Geetika. Geetika, you are handling one of the biggest company of India and in the group. And being a biggest company in the group, you have a subsidiary company, you have a multiple associate companies. Whatever you are whatever you are making or purchasing for that product, you must be getting from your own group companies. So how you managing this particular thing?
Okay. In addition to what Shan said, maybe I'll just try to bucket it differently. First is awareness. Second
Okay.
is use of technology. Third is monitoring. And fourth is, in spite of all of these three, keeping an eye out. And maybe I'll spend 1 minute on each. When I say awareness, awareness is not just of my team who knows what 177 says, what 188 says, and what LODR says, but is my accounts team, my consolidation team, my units. For example, if one of our units produces red mud as the last product and it just gives it for free to Ultratech, which is my group company, is it a related party transaction or not? They need to think before doing that. So it's what I'm trying to mean by awareness is going beyond compliance and asking yourself a question that whenever I'm dealing with someone who I know, am I going and asking someone who's there out there? I feel the way this law has emerged over the last 2-3 years, there is just no way that only secretarial team or only accounts team can comply with this. Until people who are there doing the job are aware to ask the right questions, you cannot have. So that's awareness part of it. And it goes along with your compliance. I'm not even going to get into filings and all of that because all of us do it in common. The other part of it is technology that I came up with. If you have multiple layers of units that you track, and when I units, I just don't mean units, I mean units, subsidiaries, foreign entities that you're consolidating. There is no way that you can keep sending emails, getting data, and monitoring on a monthly basis. You have to somewhere involve technology and ensure there is digitization of this entire piece where I may assume that if at the beginning of the year I've taken an omnibus approval, oh, I've done my job, but my directors keep on getting appointed in multiple entities throughout the year. Every month I may get those notices. Am I adding it to the system? Is my system sending out updates to those unit subsidiaries and foreign companies? Am I making my foreign counterparts understand the materiality limits and transaction limits applicable to the Indian entity? Am I having a continuous dialogue with them through technology and awareness to be able to manage that? So that's the awareness and technology part of it. Monitoring, I think it entirely depends on the both the quantum of transactions and the kind of business you are doing. If you are into a routine business, what I mean by routine is where you're not adding new line. What's the difference in your business versus the other? If you're doing your routine stuff, you can be laid back and you can say, okay, I'll look at it every 2 months, I'll look at it every 3 months. But if you are in a growing business in one or more ways and you are either adding up new lines or either you are increasing your capacities, sometimes the size and the scale can be new, sometimes a new product can be new, and sometimes the companies can be new. So if I have set up a monitoring mechanism for my routine transaction, the company secretaries along with the accounts teams and the procurement teams need to be on a lookout of what is different, what can come up. And that's where for listed entities, purpose and effect also comes into play. Because you cannot just stop at related parties these days, you also have to look at unrelated parties. So that's the third element of tracking and monitoring. Rest to me is compliance. What you place before the audit committee, the quality of that data, the engagement of you with your audit committee chair, and the satisfaction that you bring to the audit committee is very important. We are fortunate that we belong to certain companies who have that satisfaction from the audit committee, irrespective. It is important. Say there are certain voluntary practices that many of us do. There is no requirement of RPT certificate, but for years now we've been placing a CS and a CFO RPT certificate before the audit committee, so that they are aware that here are two people who are otherwise also officers in default, but are also taking ownership and liability for managing these entire affairs, because you cannot expect them to get into operations. So those are the few additional things that I do. I may have missed some, but largely I'm saying it's gone beyond compliance. You need to look at awareness, digitization, and keep thinking what new can happen. And therefore company secretaries need to know the businesses of the companies that they belong to. Until you will not understand your product, your business, you cannot manage RPT these days. So I'll just stop there.
Okay, Geetika very nicely summarized awareness, technology, monitoring, and eye on it. These are the four things which anybody who is doing a large conglomerate that they have to follow. Narayan Shankar, you are there? I think Narayan was supposed to leave
Have
at
dropped out. Yeah.
So, Madan sir, you are interacting with the independent director and you must be receiving their comments. You have any view how to manage this type of compliances? What advice?
Am I audible, Pawanji?
Yes, yes.
Am I audible, Pawanji?
Yes, you are audible.
Pawanji, what my observation? Yeah, because my signal is very poor. What my observation?
Now your signal is now it's really poor. Okay. Amit, your quick view.
Is it okay?
Now okay, Amit, Madan sir, yes.
Should everybody by the time my signal may be okay, I'll see at that point of time.
Yeah.
Is it okay now?
Yeah.
Yeah, what I'm saying, the majority of the questions are whether a party entity is a related party or not, whether a transaction is RPT or not, whether it's a material or not, whether audit committee approval is required or not, board meeting approval required or not, general meeting approval required or not, some disclosures are to be made or not, some exemptions are available or not. All these questions, I tell you, they are very good source of revenue for the corporate lawyer also like me. Only a day before yesterday, I've given a legal opinion on this. But what I fail to understand, whenever you have any doubt, why do we want to avoid the situation of taking the approval or making a disclosure or not considering that an exemption? Why don't we go ahead and take the permission and approval? Why don't we try to disclose it even though whether required in law or not? The moment we are having a doubt, let's go ahead and take the approval and don't go for exemption and disclose it. I think that will be better disclosure. Why many a times I've seen the companies try to avoid to comply with the law by finding these loopholes in law. Why should that be done? And later, ultimately, the regulator will issue show cause notice. You'll try to find an approval. You'll place a legal opinion, and all that. All that adds to the compliance.
Okay.
And I think better you just simply go ahead with the disclosure and take all the approvals, and you shall be one of the best governed companies in the country.
Okay. Amit, quickly your point of view.
I think, sir, Amit has left. He has dropped a message.
Okay, Shan, you have covered. So, Ankit, you are interacting with the companies. What is your view, last view?
So I think most of the things which Geetika mentioned, that CS certificate is something new, which we can definitely advise our clients. CFO certificate is a lot of clients are doing, and the challenge is definitely with the coordination between the secretarial and finance team, because most of the time the transactions get executed without even the awareness of the secretarial team. And it's also about, sir, attitude and approach. A lot of companies function with a very approach that things can be done when approvals can be taken at a later stage. So the approach also needs to be changed, considering you being a listed entity. And I see this much challenge from companies which are transitioning to being a listed company after their IPO is done. They still face those challenges, but otherwise, approach I think which Gitika said is something which can be followed, and we can also take some straws out of it.
Okay.
Geetika, if you are advocating for CS certificate, please advocate for legal opinion also.
I actually wanted to come here to say I am not saying CA certificate. I said CS and
Your certificate.
FO certificate, not a
Yes.
C.
And that is CFO.
What I meant by there is when I sign my CS
So you
certificate,
mentioned CS certificate or CS?
yes, CS.
CS and
What I-
CFO.
Okay, it appears as CS. Okay.
Allow me just one more minute,
Yeah.
answer, because this is an important point. What I mean when I say is it's a joint certificate. A company secretary is supposed to inform to the tracking teams who are my related parties. That's my this thing, because under the listed entity, it's Companies Act, Ind AS, and listing regulations. To that extent, I am the one who should be accountable and responsible for knowing what parties are included or not. Whereas the CFO has to do all the other bit, which is arm's length, justifications, ordinary course or not. So therefore, it's a joint responsibility and it's a joint certificate that gets signed by the CS, company secretary, and the CFO. That's what I meant.
That's very good. So friends, it's a time to close our session. We have already.
यार गीतिका ने तो दुकान खोलने से पहले ही बंद करा दिया.
Okay. So thank you very much all. And my special thanks to GP Madan sir, who has come late, but he has given very interesting points. Amit, Shanmugam, and Narayan Shankar, and Geetika, and Ankit, all have given a very nice interpretation of every question and what is the practicality they have discussed. No doubt, in my opinion, in company law, this is the most challenging section in understanding also or in implementation also. But I'm very happy that the way Geetika has explained that awareness, technology, monitoring, and eyes on it, and then CFO and CS certificate. So the most important thing which has come out, that awareness. You should not do, because all these violations which are taking place is not taking because that person is intentionally is doing. And in the large company, if you communicate everyone that if you do this transaction and this is your party, then you have to inform to the corporate team. So that approach is best. Second is that understanding the concept of RPT is very, very clear. Everything you have to do on an arm's length and on a market rate. But there is some threshold limit also, where whatever you are doing, but you have to take approvals also from the hierarchical basis, audit committee, board meeting, and general and the shareholders, whatever prescribed by the law. Now, earlier only company law was managing this RPT. Now the SEBI is also seeing, and in all investigation which are taking place, SEBI is identifying one basic violation, that is a related party transaction, and you have manipulated various things. So I hope.
Add one more point. I'm sorry if
Yeah.
just one last point. What I've realized over the years of this law changing is that we look at this law from a stopping point of view.
Yeah.
Also, when company secretaries, and I speak with limited experience that I have, to my understanding, this role is a business support role, not a business stopping role. So when we are approaching or when we are aware, making the awareness, it is how about I tell them. I'm not trying to tell them, don't do this, don't do this. All we are trying to say is, if you are doing, you let us know in advance. Here are your parameters, and we will fetch you and give you an approval so that throughout the year, you will be able to do the business in a very smooth manner. If there is lack of awareness from our side and they have to stop the transactions, no wonder they will look at this profession and this compliance as a deterrent rather than a business support function. So how we place ourselves in this law within our own organizations is quite left to us. So I've seen a change with that perception.
Okay, that's absolutely right. So thank you, everyone. Thank you all participants. And friends, this journey of this knowledge sharing will continue. As you have seen, this is our 186th webinar. So we will meet you on 30th August in our 187th webinar, same time, 4 o'clock, and with new topic, which is earning, relevant, and which is requires some proactive approach. And we'll meet on 30th, 4 o'clock. Till then, goodbye.
I propose my gratitude to the moderator and to the corporate professionals team on behalf of the industry, because I keep listening from everyone that these are very, very, very impactful. So thank you. This is a wonderful.
Thank you, GP Madan sir. Thank you. Despite
Thank you, everyone.
thank you.